Hello, my name is Mike Swanson. I run the website wallstreetwindow.com. I've been trading the financial markets now since the late 1990s. I've seen the big booms and the big busts, and I'm sure you have too. And this is a remarkable time. The stock market has gone up for 6 years, and just about everyone that's in the stock market is tremendously excited about that. If you turn on CNBC on any given evening, you'll see them talk about some stock that has gone up a lot that day. It's like the stock of the day. And that gives you the impression that stocks are over the place are doing this and money is just being printed like crazy. However, if you look more closely at what's really going on, there's a different story happening that no one wants to talk about. For the past couple weeks, trading setups that had been working over the past couple years are no longer working. And this is something no one wants to talk about, and most people don't want to admit even. In fact, if you look at breakout trade setups, for example, they're failing. And some people are actually starting to notice this, but most people that are trading the markets actively using things that had been working for them in the past are actually now losing money, and they're ignoring that, and they're trying to keep doing it, and it's not working for them anymore. Let me show you an email I just received recently from a day trader. This email came from an experienced trader. He is no joke. This person buys stocks that he sees jump on the news after the market opens to play a continuation of that upward momentum. This strategy was making him money, but now he's saying that 80% of the time the stocks that are gapping up are dropping instead of going up when they gap up like they had been doing before. So the trade setups that had worked before are no longer working. They're failing. And this is actually happening to traders everywhere. It's not just happening to stocks, but with many exchange traded funds too. For example, take a look at SMH. This exchange traded fund tracks the semiconductor sector. It was in a consolidation pattern early this year and broke out in February. Before such breakouts would lead to a big rally that lasted for weeks. That's what we saw happen in 2012, 2013, and 2014. But after this February, this breakout in SMH, it just went up for a few days and then dumped back down. In fact, it then did the same thing at the end of May. It broke out and dumped back down. And now what happened to the people who tried to play SMH for the big run that would have happened before, they got tricked. And the breakout failed. Now, this just didn't happen with SMH. It happened to airline stocks this year. It's happened to bank stocks last month and biotech stocks several times in the past few months too. Now, take a look at this. I just did a scan of the 100 strongest stocks of the past 12 months. Almost all these stocks made a new 52-week high sometime this past April or this past May. Now, over 1/3 of these stocks are now trading below these May highs, even though the stock market went higher at the end of June. In 2013 and 2014, they would have just continued up with the market, but they're not doing that. Okay, now look at this. This is a chart of the percentage of stocks in the S&P 500 that are trading above their 200-day moving averages. You can see how this indicator has been slowly trending down since last summer, and it took a bit of a tumble over the past couple weeks. And it did this despite the recent move up we saw in the market averages. What this means is this: most stocks are now performing worse than the market averages are. And that means that many individual stock trades are now failing. Buying market momentum by trading stocks breaking out is a common strategy to use in bull markets, but it is no longer working. What does this mean? Well, it takes some experience to understand what is happening. When I was trading in the late 1990s, I was doing breakout strategies like the guy was emailing me about, essentially. I would buy stocks that were in a consolidation pattern. When they made a new 52-week high, I'd buy them. They go up like 20, 30% in a week, sometimes in just a day or two. It's absolutely amazing. But then all of a sudden, in March of 2000, this strategy completely stopped working. Almost every single stock would break out and just go up for a few hours and come right back down. In the past, I'd make a killing doing this, and then the trades failed over and over and over again. And I did this for like 2 weeks, and I understood something's different now. Something is really changing. And what it was this is what happens towards the very end of a bull market. The breakouts fail over and over and over again, and that means you're heading for a new bear market, and you've got to adapt and adjust to that reality to make money. And if you keep doing the strategies that we're working and no longer are, you're just going to rack up big losses. Let me show you something. In order to understand the big trend of the market, I use stage analysis. A market is either in a stage 1 basing phase, a stage 2 bull market, a stage 3 topping market, or a stage 4 bear market. During a bull market, the long-term 150 and 200-day moving averages tend to act as support, and they act as resistance during a bear market. But in a stage 3 topping phase, which is what we're in right now in the stock market, you see internal deterioration inside the market as many sectors begin bear markets of their own, and trading setups that worked before suddenly stop working. And that is what we're witnessing, and that is where we are now in the US stock market. Now, you saw oil stocks crash last year, and airline stocks have collapsed in recent weeks after having a failed breakout earlier this year. The Dow Jones Transportation average is already in a bear market and below its 200-day moving averages, and they are curling over. It's in a stage 4 disaster. The Chinese stock market had a big run over at the end of last year too, but last week it began to crash. On back-to-back days, it fell over 7%. Now, I know we're not in a bear market yet in the US stock market. It's still above the 200-day moving averages. And I do expect a few select stocks to continue to go higher in the next few weeks. But most stocks are no longer acting right, and we can no longer ignore what is happening. I'm very worried that people are in fact ignoring all this. I've spoken about these things. I've written about what the internals in the market are doing. But the email I got really hit home to me that the breakouts are failing. And you see it in the charts. And I know, I'm not getting hit by that, but I experienced that in March 2000. So I know what that means. But what worries me is that I really have a sense that everyone is completely complacent right now about the market. I don't get emails from hardly anybody that's bearish on the market or even worried about the market. And I've got like a free blog area on my website of people, and none of them are worried at all. There's people on there boasting that they're on margin and stuff. And if you're on margin in a market and it tops out, you just get smashed. You can't afford a 10% drop. And a lot of people do think, oh, I'm not worried about the market. I'll just get out, when it's down below the moving averages, and, if they're not on margin, and then I'll make up my mind. But what happens is people see the market fall, and then they'll keep rationalizing why they should keep holding. And I've said publicly several times in interviews I've done in different places that people should sell 10%, have a cash reserve of 10%, put 10% in gold, and they'll, do okay over the next couple years because the gold will go up, and the cash reserves, they won't lose money in there, and they'll be able to use that to buy at a cheaper level and but people aren't even willing to do something as simple as that. There's just no concern at all. And so that's why I'm doing this video. I'm hoping that you'll pay attention to these indicators and take what is happening with the market very seriously. And if you're someone that's been trading short term and the trades are not making money now, stop. Stop trading. Okay? And don't think, well, I just do another one. It's not your fault if you were doing trades that were working last year and now they're no longer working. It's because the stock market is changing. Now, it is your fault if you keep doing it and keep losing. But instead, look at it as the market telling you something, okay? And I'm listening to what the market is saying. And I want everyone listening to this video to do the same thing. Next month, July, is going to be a very interesting month. We have earnings season. We have a Fed meeting at the end of that month. We could see the market averages go up and the NASDAQ make a new high, or the Dow get back up to its high. But if these internals continue to act the way they are, July is going to be a pivot point and lead to a disaster the rest of the year. And the market is showing us, that things are changing, and I don't want you to ignore that. So stay tuned, and I'll be communicating with you in the weeks and months ahead. But this is not time for complacency.